When your portfolio looks like this, maybe stock picking isn't your thing. 2 months into investing and he's down almost 70%. He started investing in mid-October. After reading a lot of DD, he put a big chunk of money into rare earth stocks. It felt smart, the thesis made sense, and then the market did what it always does. Those stocks peaked almost immediately. And as they started dropping in November, he thought he could make it back in the meantime by trading options. One bad trade turned into another. Losses turned into revenge trades, and every time the account got lower, he topped it up again. $6,500 gone in options. His stock's down 50%. Looks like he'll be switching to VOO and chill and calling it a lesson learned. While most portfolios got slapped this week, this trader flipped the script. This guy woke up on Tuesday morning, saw the green open, and decided to take a wild shot. At 9:30 a.m., he drops $5,000 into 25 zero-day SPX puts. Straight up a gut-feeling gamble. And it gets even crazier, he wasn't even watching the trade. He was busy at work and could only check his phone during his break. So he finally opens his app around 11:30 a.m., and this is what he sees. The market had completely rolled over. It went from a strong open to a full-on crash. And his $5,000 gamble was now worth over $150,000. A 3,000% gain, all because he was too busy working to ruin the trade. So tell me, was this a ballsy move or just dumb luck? Imagine trying to scalp some quick gains off the Nvidia earnings euphoria. And by the time you look back at your screen, your SPY calls are already nuked. That's exactly what happened to this trader. He bought 180 SPY calls with a strike of $675, thinking the morning pump would give him an easy win. But he got distracted and SPY flipped on him so fast he ended the day down more than 65%. And the timing couldn't be worse. Although the market opened strong, with Nvidia ripping more than 5%. The whole mood flipped the moment the jobs report dropped. Sentiment flipped, yields moved, and the whole market reversed almost instantly. That's the danger of scalping short-dated options. You're not just betting on direction, you're betting on timing. And the moment macro drops in the middle of your trade, your premium gets evaporated. This guy didn't just lose $1 million. He's now in debt. And it all started with options. He sold the house he grew up in and turned it into $1 million. For a moment, he thought his life was set. He had plans, a future, a girlfriend he wanted to build with. Then the trades turned. One bad decision turned into panic, and panic turned into chasing losses. Today, the account is almost zero. He now owes the IRS $179,000 and another $100,000 to creditors. He hasn't even told his girlfriend yet. He says it himself. He chased the dopamine and options chased him back. This is what happens when leverage meets emotions. Options don't ruin lives, but ignoring risk does. If this hit close to home, stick to shares and maybe close the options tab. This guy is straight up calling MicroStrategy a Ponzi scheme. According to this Reddit user, the company is nothing more than a leverage play on Bitcoin. They borrow cash, buy Bitcoin, and the stock reacts with leverage. In his post, he starts with one question: how much of the money they raise actually buys Bitcoin, and how much just goes to paying dividends on their debt? And he presents what he calls the Ponzi ratio curve, a chart comparing how much they spend on Bitcoin, how much they owe in daily dividends, and how that gap has completely blown up over time. With Bitcoin spending trending down, dividends trending up, and the ratio spiking hard, which he claims is the red flag. He says it means MicroStrategy is now spending far less on new Bitcoin than it owes in daily dividends, and that gap keeps widening. He warns that if Bitcoin drops too far, MicroStrategy could be forced to liquidate first because they carry real debt, turning it into a standoff that could break before crypto even notices. And while some users agree with him, they warn the whole thing only cracks if Bitcoin actually drops. If Bitcoin goes up, the so-called Ponzi just keeps running. So where do you stand? Betting against MicroStrategy or betting on Bitcoin? He's up $64,000 in only 2 months. His goal? Turn his IRA into $100K before Christmas. When people asked how he did it, he showed off his brilliant strategy. Basically, it's just 0 days till expiration calls or puts depending on the vibes. If we look at his post history, yesterday he was at $47K after going all in selling QQQ calls. And today, he doubled down, sold another batch of calls for even more profit. When this stuff prints, it's easy to think you've got a gift for trading. 2 wins in a row and he already thinks he's the next Warren Buffett. So be honest, how long do you think this one will last? He called it. He literally called it on Friday, and now he's printing harder than half of Wall Street. This Wall Street Bets veteran posted a full breakdown predicting that Carvana would be added to the S&P 500. The mods deleted it, but today he got the last laugh. Because this morning, Carvana officially joined the S&P and the stock exploded more than 12%. And here's where it gets wild. He loaded up on short-dated calls expiring this Friday. His break-even on the first batch, 419. On the second, 426. And with Carvana already pushing 450 today, they're printing exactly the way he predicted. The man called the squeeze before it even happened. Now he's riding one of the craziest S&P inclusion surges we've seen all year. Drop a follow if you want to catch the next one before the mods delete it. He made $4,500 in only 30 minutes. This trader timed the drop perfectly. At 9:52 a.m., just when Iran started bouncing, he bought 50 zero-days till expiration put contracts with a $41 strike for 16 cents each. Minutes later, the stock rolled over. Crypto miners sold off and risk sentiment flipped fast. He didn't get greedy, and just 33 minutes later, he sold the contracts for $1.07 each. That's $5,350 back for a $4,550 profit. Could he have made more? Sure. But you know the rule. If it's good enough to screenshot, it's good enough to sell. Someone on Wall Street Bets just dropped $1 million on Unity calls, and he thinks this thing is about to moon again. He's holding $2,865 calls, expiring March 2026. His break-even is $68.55, and Unity is trading around $50, so he needs roughly a 40% move in 3 months. When someone asked why, he said Unity is turning around with their new ad product and claimed they've landed big partnerships with Epic Games and Unreal Engine, their literal competition. But here's the crazy part. His position wasn't always $1 million. He held it through a brutal drawdown, down 80% at the lows. Most people would have tapped out. He didn't. Now he's only down 20% and suddenly calling himself very bullish. With Unity already up over 100% this year, the real question is, do you see Unity ripping another 40% from here, or is this YOLO about to speed run its way back to 68K? Drop a follow to stay updated on how this $1 million Unity YOLO ends.
I declare bankruptcy!
Well, iRobot just declared bankruptcy, and this trader might have to declare it too. Turns out over 80% of his entire portfolio was in iRobot. Yes, the Roomba company. And honestly, first question that came to my mind too. He said he bought these on Friday, looking for a quick swing if it pumped today. And to be fair, it did rip hard last week. But when a quick swing is 80% of your portfolio, that's not a trade. That's a coin flip. Looks like Roomba didn't clean the house. It cleaned his account.